Welcome to Buy, Hold, Sell. My name is Matthew Kipman, and today we have Peter Esho from City Index. Peter, today we're talking about gold for 2013. Recently been very disappointing. What's your outlook for the precious metal?
What I look at is supply, and what we've seen is the marginal cost of producing an ounce of gold continues to go higher. I think that's supporting the price. I think we'll see 2,000 on the gold price, perhaps a little bit higher, because it's becoming a lot more expensive and a lot harder to mine gold.
And it will finish the year where, do you think?
Probably just over 2,000.
Gold price, I think it'll hit 2,000 over the period. Why? Continued pumping of money into the system, particularly the US. You know, they're pumping in QE3 something like $40 billion into the market on a monthly basis. So the US dollar will weaken and therefore gold will increase.
I'm not an expert on gold, but let's just speculate on what might happen. I suspect everyone who wants to own gold owns it around the world. I also believe that the US dollar is going to rally, and if you look at where gold's gone to, it's actually rallied as the US dollar's fallen, so maybe it retraces as the US dollar comes back.
Gold's an interesting one. It tends to perform well when you've either got inflation globally or when you've got intense deleveraging risk globally. Now, in this current environment, you're actually not seeing too many of them. We don't necessarily believe it's going to fall dramatically, but it's just difficult to see an environment where it does well.
So flat for 2013, not a great place to be.
That's right.
Look, though I'm not necessarily a gold bug, and I don't hold gold, I've got to say, I think the prospects for it are pretty good. I think while the world continues to have the debt, while you've got significant demand from the central banks in particular throughout China and India especially, buying gold, buying big production, then I think the gold price is going to keep on moving higher. I know some of the big investment banks have downgraded their forecast for gold prices into the new year. And the reason they've done that is because they believe that the United States and Europe might improve. And that will actually put emphasis off gold and put emphasis back into the US dollar. My gut feel is that that might be just a bit early.
I think there's too many people long gold. I think you might see gold head down. It'll be well under $1,500 by the end of the year.
So I'll tell you what, the Reserve
That's
Bank,
US dollars.
Reserve Bank of Australia sold most of its gold holdings in 1997. It was $350 an ounce. They put most of their money into the US dollar. You'd have to think that they might have made a mistake.
I think they did.
You don't think they'd go back into gold, do you?
Well, if they do, sell.